Trading options can be an exciting and potentially profitable endeavor, but it's crucial to approach it with a solid understanding of the basics and the risks involved. Here are 10 essential things you should know before you start trading options. Options are financial derivatives that give you the right, but not the obligation, to buy or sell an underlying asset at a predetermined price within a specific period. There are two types of options. Call options. These give you the right to buy the underlying asset. Put options. These give you the right to sell the underlying asset. Understanding these basic concepts is fundamental before you dive into options trading. Options trading comes with its own set of terminologies that you need to be familiar with. Strike price, the predetermined price at which the option can be exercised. Expiration date, the date on which the option contract expires. Premium, the price you pay for the option. In the money, ITM, when an option has intrinsic value. Out of the money, OTM, when an option has no intrinsic value. At the money, ATM, when the strike price is equal to the current price of the underlying asset. There are various strategies you can employ when trading options, each with its own risk and reward profile. Some common strategies include buying calls and puts, simple strategies where you buy call or put options, covered calls, selling call options while owning the underlying stock, straddles and strangles, buying both call and put options to profit from high volatility, iron condors, combining multiple options to profit from low volatility. Options trading is inherently risky. You can lose the entire premium paid for the option, and some strategies can lead to significant losses. It's crucial to assess your risk tolerance and only invest money that you can afford to lose. Options prices are influenced by various factors, including market volatility. Higher volatility increases options premiums. Interest rates. Changes in interest rates can impact options pricing. Dividends. Expected dividends can affect options prices. Options trading has specific tax implications that vary depending on the country you reside in. In the United States, for example, options are treated as short-term capital gains if held for less than a year. It's essential to understand these tax rules to avoid unexpected tax liabilities. Having a solid risk management plan is crucial in options trading. This includes setting stop-loss orders to limit potential losses, diversifying your portfolio to spread risk across different assets, monitoring your positions, regularly checking your trades to adjust your strategies as needed. Selecting a reliable and user-friendly brokerage platform is essential for successful options trading. Consider factors such as fees and commissions. Look for a brokerage with competitive pricing, trading tools. Ensure the platform offers advanced trading tools and educational resources. Customer support. Good customer service can help resolve any issues promptly. Before risking real money, consider practicing with a demo account. This allows you to familiarize yourself with the trading platform and test different strategies without any financial risk. The financial markets are constantly evolving, and staying informed is crucial for successful options trading. Regularly read financial news, follow market trends, and consider joining trading communities or taking courses to continually expand your knowledge. Trading options can be both challenging and rewarding. By understanding these 10 essential points, you can better navigate the complexities of options trading and increase your chances of success. Remember, patience and continuous learning are key to becoming a proficient options trader. If you would like to delve into any of these points in more detail or have any other questions, feel free to reach out.